Welcome to Wall Street Review. As always, the following analysis is for educational purposes and does not constitute financial advice. In June 2026, the artificial intelligence firm Anthropic confidentially filed an S-1 for a record-breaking IPO. That filing occurred just days after the company agreed to pay $1.5 billion in the largest copyright class action settlement in U.S. history. This dual-track ledger illustrates the tension. On the left, we see exponential growth. Anthropic's private valuation surged from $380 billion to $965 billion in mere months, driven by a $47 billion annualized revenue run rate. On the right, we see the simultaneous accumulation of severe legal risk, culminating in a $1.5 billion settlement penalty. Pre-IPO secondary market trading already prices the company between $1.05 and $1.15 trillion. The $1.5 billion settlement functions as a calculated AI piracy tax, a known toll paid specifically to clear the runway for a trillion-dollar market debut. Deconstructing this specific legal and financial maneuver provides the most accurate lens for valuing the future of the frontier AI industry. The legal pressure originated from Bartz v. Anthropic. This class action lawsuit brought together authors and publishers, represented by lead plaintiffs like Andrea Bartz, who claimed the AI giant built its business on stolen intellectual property. The case tested a central legal question for the entire tech sector. Is the foundational act of training a large language model a massive copyright infringement? Judge William Alsup answered that question with a landmark bifurcated ruling. He split the legal analysis into two entirely separate actions: the algorithmic training of the model and the initial acquisition of the data. The court found the training process itself, ingesting text to learn linguistic patterns, to be transformative, granting it full protection under fair use. The second half of the ruling applied to the data pipeline. The court stated that the unauthorized acquisition and storage of pirated datasets is an irredeemable infringement of copyright. The law now explicitly protects an AI model's ability to learn, while heavily penalizing the methods a company uses to build its digital bookshelf. Anthropic did acquire some of its training data legally. They purchased physical books, scanned them into a digital format, and destroyed the original paper copies to comply with format shifting rules. By focusing on the storage of the files, the company downloaded over 7 million pirated ebooks via BitTorrent protocols from shadow libraries, including Library Genesis and Pirate Library Mirror. The motivation for this theft surfaced during discovery. Anthropic CEO Dario Amodei admitted internally that they relied on pirated materials to avoid a legal practice and business log. The result was the creation of a central library, a permanent, general-purpose digital archive built by Anthropic specifically to store these shadow library downloads. This data pipeline blueprint shows the legal boundary. The court took a strict stance that subsequent legal, transformative AI training at the end of the pipeline cannot retroactively immunize the initial illegal download at the start. This specific loophole correction terrifies other AI developers, many of whom assumed the fair use umbrella protected the entire data pipeline. By focusing on the storage of the files, rather than the training of the algorithm, the court created a lethal legal bottleneck for any company that scraped the internet without explicit permission. Heading into a December 2025 trial, Anthropic faced an existential financial threat based on the mechanics of statutory damages. Under U.S. copyright law, willful infringement carries a penalty of up to $150,000 per work. Multiply that across 7 million pirated files, and the theoretical liability reached into the hundreds of billions of dollars. To avoid immediate bankruptcy, Anthropic entered mediation and agreed to a strict, non-reversionary $1.5 billion settlement pool. This cascading model shows how the funds are distributed. Strict class criteria, requiring a valid ISBN and U.S. copyright registration within 5 years of publication, filter the initial 7 million raw files down to roughly 500,000 eligible works. When divided equally across the eligible pool, the final payout math equates to approximately $3,000 per valid work. Before distribution, roughly $101 million of the settlement is siphoned off for plaintiffs' attorney's fees. Meanwhile, approximately 350 authors opted out of the settlement entirely to pursue separate, ongoing statutory litigation. Anthropic weaponized its massive venture capital war chest to compress infinite theoretical liability into a fixed, survivable expense. From a Wall Street perspective, it was absolutely mandatory for Anthropic to clear this specific legal hurdle by June 2026. Institutional IPO investors and public markets evaluate risk rigorously. They refuse to absorb unpredictable, catastrophic legal overhangs on the balance sheet. This bar chart compares valuation multiples. To justify its staggering $1 trillion public debut, Anthropic commands an aggressive 20x to 32x revenue multiple applied against its $47 billion run rate. That towers over canonical SaaS peers like Salesforce at 8x or Snowflake at 15x. Holding that premium valuation together requires aggressive operational assumptions. Anthropic must maintain double-digit annual growth and hit a 77. The upcoming IPO needs to raise $60 billion, or more strictly, to fund future compute infrastructure. This multi-billion-dollar legal penalty functions as a necessary capital expenditure, the entry price for that $60 billion public raise. At the frontier of artificial intelligence, multi-billion-dollar legal penalties are simply the cost of doing business and securing market dominance. The macro impact of the Bartz settlement establishes a clear precedent. Unauthorized data scraping for frontier models carries an unsustainable legal cost. The generative AI industry is now forced to transition out of the era of free data and into a rigid, highly expensive compliance and licensing market. This exposes the fragility of Anthropic's current financial tightrope. The company projects $19 billion in compute costs for 2026 alone, while remaining deeply unprofitable. Anthropic CEO Dario Amodei has stated publicly that even a 12-month delay in AI progress could render the entire company bankrupt. That timeline is continuously threatened by external regulatory pressures, including national security export controls and intense SEC scrutiny ahead of the IPO. Despite the trillion-dollar market projections, the foundational economics of Anthropic balance on a razor-thin margin between extraordinary success and operational insolvency. The opening paradox resolves here. Big tech is perfectly willing to pay billions in penalties for past intellectual property theft if it secures trillions in future public capital. The Bartz v. Anthropic settlement provides the definitive blueprint for how the Wild West of the AI frontier will be corporatized, regulated, and priced. For more analysis on the economics driving the tech sector, follow, like, and share the Wall Street Review. 关注视频号华尔街透视，点赞转发。The cost of building artificial intelligence now permanently includes the highest intellectual property tax in human history.